Hello from the children of planet Earth.
What's up, everybody? Good morning. CPI day and lots of other good data coming through. Jobs data. I'll take a look at that today. See how things are going. Is the market going to recover from this week of selling or not? It's been hanging tight. We fell. We've been sitting still, and then now we're waiting for some good data to come through to jolt some of the bears out or see if this market's done for. Hang tight. We'll talk in just a minute.
Hello from the children of planet Hello from the children of planet
Welcome, everybody. Good morning. Smash the like button. We'll get started in just a minute.
Hello from the children of planet
Oh, what's up, everybody? Good morning. Good morning. All right, we're walking outside of DD bands at the start of the day. Nasdaq already breaking to the upside on that irrational. For the most part, VIX is in decay, finding lower lows over yesterday. That's a great sign that the market's going to find some stability here now. Again, unless something happens and trigger things going higher. As you can see, we're running right down towards this area that we were trading in earlier. I do like what I see, at least so far. Like the market, like I said, we know that September, October, things are going to be a little kind of stopping point. Monthly maps are pointing at it. Monthly maps squeeze a little bit more life out of the rally. Earlier showed October. Now it showed, then it showed September. Now it's showing, as of yesterday, August. But see, if we see a good day like today, we'll see if the market shifts around and we'll watch this monthly map. So basically, where might be just a little bit more. All right, so we're going to look forward today is to see us trading outside or inside DD bands. Today we're already topped the other band, upper band. The ratio is still greater than half, so we're still bullish. The upper band is preferential, but from here the market is considered random and irrational outside of the band, which is going to mean it's a light trading day for me today. Out the door, I'll be trading just a few micros. Not trying to slam anything too hard. Oops. Play some of the settings here. How y'all doing today? It's been an interesting week, right? Let's analyze commitment traders just to get started and get rolling out the door here. Gonna take a look at something that's been kind of healthy pullback. This is what you need to see in the market. There has been some selling pressure. You can see. Let me make this a little bigger here. This is gonna be the S&P futures. Everybody can see this right here. The green line has pressed down a little bit over the last couple of weeks. Not hard, not too hard, but 820 to about. Or let me see. Yeah, 820 to about 20,000 on the sell side, and selling and shorting together when the green and blue both point down. Markets are illiquid. Therefore, that creates a little bit of selling pressure. But you always have dips in the middle of rallies. So what is the magnitude of what this is going to do? Obviously, volatility is going to tell us everything about the state of the liquidity of the market. This is a delayed data point. This comes out a week late. The VIX right now is going to reflect liquidity, means there's got to be somebody buying to somebody selling. Now, the other reportables are actually accumulating a net long here, which is interesting to see that, or accumulating, sorry, less of a net short. Dealers, everybody's selling. That's why the market felt thin for the last week or two, right? And so that thin market's reflected by that volatility that you see. Volatility is a degree of thinness of the market. There's a bunch of ways to say what volatility is. It's how high and low prices need to go when keeping a mean price central. How high and low you go to find buyers and sellers will be volatility. So at the current price, thin means there's fewer people there. Markets can move really quickly to find the nearest buyer. And so volatility, as you see, went up for the last couple weeks. Or last week, I guess, is now in decay. We are finding lower lows off of this. Ever since we had the event, when the market moved higher, the market moved lower on that credit downgrade event, volatility is now back to the levels of the day that happened, which is good. It's good to show that the market's going to become liquid here. It doesn't mean it's going to rally, but it does mean that the market's every dip is getting bought back up, which means the market, at least for now, is slowing down. The instability is starting to kind of tighten up. Now we're going to see how this plays out next couple of days. Does this turn into a continual move back to at least retrace or revert to mean? At this point, that's what I'm hoping for. I'm hoping we get like 1 or 2 solid days leading up to expiration. It might be the last 2 days leading into expiration, but at least to attempt to retrace some of this, just to see. It's hard to see that markets just turn around and collapse out. Typically, markets that were bullish enough stabilize before they fall. So I want to see that stabilization with the lack of volatility create another upside bump. And we'll analyze the monthly maps in Rocket Scooter just to see what the actual positional layout looks like. Continuing jobless claims, it's a beat. Let's look at the 2 different things that matter. Let's look at the year-over-year CPI core, year-over-year CPI regular, initial jobless claims, and continuing jobless claims. Let's look at these 2 first. Continual jobless claims are a sign of people being able to go back to work who have been laid off repeatedly. At least since the rally started, right? We've been trending down as people that were unemployed are going back to work. Over week, it's still pulling back. Now on August 3rd, we had a data point that was slightly higher. August 4th back to being low. Like I said, this is trending lower, which is a good sign for people going back to work. At least for now, it's a good sign that, we're not in a recession. This didn't happen. We have essentially this little data point here. The initial jobless claims is showing a new burp of layoffs. So not sure where this is isolated to or where that's coming from. But these are people that just got laid off. So you have some people going back to work, some people getting laid off. It's a weird world, right? I read something today that UPS truck drivers now make more than programmers, as I think the union negotiated $160,000 a year salary for some drivers. And I don't know all about it, but there was some buzz about it. So you're seeing inflation and wages just moving all over the place. So could be that certain sectors are becoming weaker than others again, as far as the employment situation goes. You keep an eye on this, right? So people that get laid off, how fast are these people able to get their jobs back? Will be the continuing unemployment claim number. This is the CPI index, obviously coming down. The year-over-year value is coming lower than the last month's print. 4.7 on a 4.8. Inflation's still here. I was also reading this morning on Twitter. Somebody's talking about how they were looking at a bag of apples cost $9 and these cost $3. So again, inflation's still here. It's coming down, but it's still a problem. And inflation is affecting everything from the bond market to the credit markets. I mean, it's not the best world to be living in now. Even though it's improving, it's definitely not better than what it has been in the last 40 years. So we need to get this number down below the fours. Clearly in 1990, there was a burp that was similarly high, but we still need to get things down because we're not going to enjoy the economic prosperity we need in businesses that went on this little hiring spree off of this rally. The cash you made from their stock buybacks might start hitting speed bumps again due to inflation, impacting the credit market, prices of things, people's ability to spend their wages effectively on something, and again, it gets back into the problem scenario. Let me go back to here. This was the core. Oh, sorry. So core excludes food and energy. These are all going to be consumer discretionary type things. This is the actual CPI itself. Actually had a little bit of a bump up off of yesterday's reading. A second smaller wave of inflation is very possible as we're starting to see, again, spot issues with employment and wages and things. So the fact that core went down and CPI went up means that the food and energy is where the problem lies. And as I talked about earlier this morning with the bag of apples, that's probably what that is. Difference between core and difference between regular is going to be the food and energy. It's going to be the price of things the essentials people need to live are also packed into here. It still beat the forecast. It's still lower. Look at the max on this one as well. We're getting back to overall somewhat degree of normalcy compared to the high peaks of the 2000s, but still food and energy prices off the charts. And another thing to note about that is that some of you may not remember this because I remember this from the olden days. Oil being at $60, $70, $80 is very unusual. That is a definite not a practical value for oil that really makes a lot of sense. You might be used to that since the 2000s created a world where it was like that. But historically, over time, you adjust for inflation, price of oil has always been between like 35 and 40 bucks. It's pretty normal. So the two wars that we had in the early 2000s pushed us to the $100 plus range, and we've been $50 to $100 ever since then. And inflation's pushing its way into energy prices. Everybody's feeling that. So it's a weird world we live in, but you can see that the essentials for humans are definitely being priced higher. All right, we got a bear short up on the S&P right out the door. Let's see where we open. Oops. Let's see where we get on QQQ. Wait a minute. Not come in yet. Wait, no, that was yesterday's data. All right, give it a second to pop up. All right, here we go. All right, so we're opening BSU right below hedge pressure again. That's really kind of, that's really kind of meh. So breaking through hedge pressure is a bump up to next resistance. We'll see what we get. We are actually opening resilience is nice and high out the door. Breaking through hedge pressure on a hedge pressure support. Let me see if I get any red candle. I might like to take a long up to DD bands. Remember, we're kind of at resistance on NASDAQ, so I'm kind of hold off on this one today. I do want to see a definitive break and some move higher to convince me to do anything at all. All right, everybody, smash that like button real quick, if you don't mind. While you're sitting here, I'll pause my mic for a minute and go eat my breakfast. All right, I'm back. All right, everybody, friends, don't forget to go down and smash that like button real quick. This is what I'm going to do. After we had yesterday, somebody was talking about, can you do this? Can you do that for me? This is something y'all can do for me, right? You guys want me to spend 30 minutes explaining my trade. You can spend 1 second clicking the like button. So what I'm going to do from now on, just because I can spend this hours developing the platform and sleeping in, what I'm going to do is I'm actually doing stuff right now and making trades. None of y'all can see it, and I'm not going to show you till you like the stream. That's it. And y'all are going to show up late every morning. So make sure it's the first thing you do. If you got to put a sticky note on your computer to help your team out, we're going to do that together. Love y'all. If that doesn't work in 2 weeks, what I'm going to do is I'm going to put the stream private and then make people pay to watch it. I love y'all to death, but let's go. Y'all help out. I don't want to work. I don't want to have to like work to get y'all to help out with that. Let's get that algorithm going. We love y'all. All right. A little hedge pressure break. I do like a little hedge pressure break scenario here. I love blackmail with my black coffee. Smash. There you go. I love y'all. All right, let's go. It's kind of like this, right? We had an hour of yesterday's stream with one person wanting a spotlight to say, give me this, give me that. I want this. And, you know, y'all can help us out a little bit. I love y'all. Okay, I put in a little bit of a long trade right out the door. I'm just going to trade upper DD bands on the S&P. This is pretty simple. Nothing too crazy. It's pretty much right there now, and I might not actually. It's at 45.25, give or take. Nothing big. Get a Ric Flair woo. Let's go. All right. Like I said, we already tapped the DD band once. So the market's already considered, the yellow light is on. So from here, I'm just going to take a little bit of a gamble in a day, use some R&R. Hedge pressure long 448. Clearly that's easy to see. And to kind of get this market moving. All right. Liking what I see. NASDAQ pushing higher. Let's double check what the NASDAQ liquidity maps are. Man, I'm loving the futures clean. It's nice. It's pretty easy to do. Just clicking the button, orders go through. It's fast. I'm going to tell you, I've been hearing a lot of complaints lately about other platforms having a hard time with their data feeds and things just breaking. We're going to be able to launch trader funding programs pretty soon. We're about to work on all of that right now. It's kind of like the next project that we're doing. And going forward with that, essentially we'll be the alternative. We'll be probably our goal is to be the platform of choice for trader funding programs. So all of you that are doing something like that, you'll be able to use our platform to do so. Adding SPY res underneath the chart would be nice. Oh yeah, I don't know why it's not there. Oh, because this is the futures chart right here. SPY resilience out. We can just add it. Hold on, where's the indicators? I recently redid my layout. Oh, that's beautiful. Look at how pretty that is. And I don't need that tooltip every morning. There you go. The Tsukiki resilience. We're going to look for it. This is a new method where outside of DD bands we're irrational. Everybody, pop quiz. When markets are rational, what kind of pivots do we use for exit targets? Does anybody know? This is a new technique. When you're irrational outside of the DD band, what are your targets outside of the DD band? You don't trade. You can trade. If you trade, it's obviously day trading is a small position. If I do very, very, very small, we all know that irrational markets, we look for illiquidity pivots, right? Or gap fills. Let's go ahead and do some of those. Let's look for gap fills and look for illiquidity pivots. We all know these, right? Okay, so let me put some charts up here. All right. So let's make sure that we got our gaps marked up. Right. Let's go back to here. The first thing you always do is mark up your gaps. I have these old ones there. Okay. So let's make sure we know where we have upward targets just in case we have a nice irrational day and we see upside. So you need to always make sure that when you're inside the DD bands, DD band is always, useful for an exit target. All right, so right now, let's mark the ones we haven't accounted for. There's that gap fill there. Obviously, I'm going to do one right here. So we're going to make sure we have some targets there. Now, these aren't the immediate ones for today, because clearly they're pretty far away, but we're going to find another technique, which you will know. Everybody knows the downside gaps are here. The other technique is illiquidity pivots, right? We call them yellow lines and red lines. Illiquidity pivots are going to be something we can look for in the immediate term as well. So let's go ahead and obviously 456, pretty far away today. So let's go ahead and see if we have any kind of what we call yellow line, red line, any kind of impact red line, something to take a look at. We're gonna have to kind of estimate this. I'm gonna come back and double check them because I haven't been upkeeping them because of the music festival the last week or two. But let's go through and see what we got. I'm gonna eyeball it. A day like this, there's certainly an impact at the top. This is a technique that you have to learn. It's in the Rocket Scooter educational stuff. So let's go ahead and mark it. Definitely there. Okay, so that's an impact. So these are upper targets today, 45, 55, which is great. We're going to meet that one right there as a resistance. Let's find another one. We have the futures gap fill clearly. Now, again, I don't use futures gap fills as a illiquidity pivot because there was no illiquidity that caused this, or no selling pressure or imbalance to create a rebalance. The market just gaps down on the IOP equation. So what happens psychologically, there could be a resistance there, even though it's not really a red line. You guys know what I'm looking for if y'all done it so far. I think that those are close enough because 55 is 30 points away. If there's any more on the downside moves, that's basically it. You guys have those yellow lines? Okay, cool. So there's that, and there's that. So a couple of these guys here to take a look at. So essentially, upper targets, we're going to use these as gauges on the upside move in case there is a breakout and a runaway today. Like, where do we go to rebalance? And that's a good one. CPI coming in good. Obviously, I know that the Fed doesn't want inflation, but they also don't want a recession as well. They obviously. Now, again, there's going to be a strong resistance right here at the DD band, so it's going to be hard to break through that. Going to have to keep an eye there and make sure that everything stays nice and stable. What's good about the SPY today is that we open right above or right below hedge pressure. So breaking hedge pressure is the rare of the cases. Now, if it stays, again, risk and reward is good from right here. As long as resilience stays positive, then we are supporting at hedge pressure no matter what kind of resistance we have. So even if it V's back down and tries to sell right out the door, not too terrible of a sign. So, you know what I'm saying? So as long as resilience is nice and strong, we are supporting outside of the box, which I do love. So this could be a really strong day today for the upside moves. Steve, you nailed it. Killed it. Nice job. Alan, you nailed it. Killed it. Travis, you nailed it. Killed it. Y'all all nailed it. Y'all are great. Okay, so remember, as long as resilience stays greater than 0, we're likely to stay upside of here. So that's good. Res greater than 0. Hedge pressure breaks are rare. The market's going to want to make its way back down in there, which makes you curious if we're going to get a nice red candle off of that. I might get a second shot off of it. I might want to just, for fun, take profit on that scalp really quick that I just got. And I just closed everything out and put that in my pocket. So let's let it pull back a little bit, and I'll try one more time for the bigger run for the day. As you know, clearly here, trading 2DD band is typically the way we do go. And usually call it right there, but now I'm looking for what do I do in case we break DD band and keep running. So obviously the trick right here is if we start losing hedge pressure or resilience goes less than 0, I'm pretty much down. So breaking to a BLU, going to next resistance is a pretty good sign. Again, just take a quick scalp with the way volatility's been last couple of days. I'm going to see if this pulls back. And it gives me a second trade to take. Okay, obviously, VIX has broken through hedge pressure to the downside. This is a great sign today for some upside, you guys. Just paper trade on days like this. It's a gambling day. Yeah, you can actually treat it that way. I only trade a couple of micros. See, I only was up $200 or $300. It's not like I'm in there long in the farm off of irrational days. Let the market do its thing. There's a catalyst. Hedge breaks to the downside on UVXY. Hedge breaks to the upside on the index. Looking pretty solid, right? Not going to overtrade today. I can't wait for those red lines, yellow lines to be automated. I know, right? I love that you guys are finally helping out and listening and helping with that stream algo. And also, Let's check monthly maps today because UVX Y looks nice and clean. I like this. I like that downside pressure there. Let's run a monthly map on the SPY. Like I said, I got my scalp got out of the way. If you're still... Pat Sutak apparently has an opinion. Now here's what I'm gonna do. Pat, let me tell you something cool, right? I'm developing a trading platform. I'm gonna wake up and stream as a luxury to help people out for 2 hours. If you can't do 5 seconds of work, don't watch a stream. It's easy as that. It's not. These aren't viewers. These are friends. We're all friends. I'm telling my friends, don't be fucking lazy. That's how it goes. It's as easy as that. I know people like getting free information on YouTube, but you can help and everyone can do their part. I'm a big fan of everyone doing a little bit of teamwork. And if I'm the leader of the team, I'm going to turn around when my squad is supposed to be running and I see 90% of people walking, I'm going to yell at them to start running. It's more like aggressive leadership. You guys like that? Y'all have been with me for half a decade. Y'all know how it goes. We run as a team. We're the best trading team on the planet. For sure. Easy as that, yeah. Super cool like that. All right, we're doing pretty good. Trades moving out outside of here. Yeah, he needs a timeout like Ralph got one. See, like Ralph gets a timeout because I love Ralph, right? That's how we are. But we're a squad, like we run together. We make sure everybody's on the same page. It also helps you warm up. If you get up and you're repeating an action every day, you're not late. You're not like being lazy in your approach to trading as well. Like the way we teach things here is to get everybody on the same page and walking together. It's definitely not me being a pansy ass about it. Trust me. We want to push you guys to do the same thing every day, be repetitive. We're just kidding, Pat. We love you, but seriously, it's trading. Like in Wall Street, right? It's Wall Street's. This isn't Generation Z TikTok. It's Wall Street. Wall Street's more like a "fuck you, I'm gonna take your money" attitude that everybody has. It's like no mercy sort of world. Everybody cusses and screams at each other. It's just Wall Street. You know, people don't care about their feelings here. It's all about making money. Yeah. Well, we'll make sure everybody does something in return. So we do a lot for you guys. Developing the platform, streaming, helping, coaching. You know, we make sure that you guys are fucking killing it as much as you can. So everyone knows we have rules. We want y'all to say if y'all want to see the position I'm in and see the trade I'm doing, y'all gotta just do that one little action every morning. Sweep the leg. You know, I heard during Cobra Kai, the actor that played him passed away. The sweep the leg guy from the Karate Kid movie. I'm reading about that. They put him in a body bag. No, not sweep like the body. Put him in the body bag guy. That guy. Not Kreese. He's the one that said sweep the leg. Put him in a body bag, Johnny. Yeah. No, his teammate, his friend. Remember that guy? He was one of the Cobra Kai fighters in the original movie. Yeah. Kreese is still alive for sure. Hey, no, Pat, appreciate it. I'm giving you constructive criticism. I don't care what you're saying. There's your constructive criticism. I love you to death. Watch the stream and learn trading, though. It's not terrible business. Our business is a multi-million-dollar business, and it gets bigger every month. This is great. This is great because I shape these people into being good traders and doing the right things. They know I love them. You might be your first day here, but it's okay. Trust me. We get 10, 20 new clients a day. Yeah, the kid with he had kind of like the bull haircut. Yeah, that guy. I'm strict. That's a good way to put it. I'm strict. Matt is strict because he loves us. He's not allowed to trade without making your bed first. That's right. I tell everybody, you wake up and make your bed before you trade. You have to do something repetitive every morning. This is the rule. You might have missed the coaching where people are just poking at you, Pat. Here's the coaching. The coaching is this. To change a bad habit, you must replace it with a good habit. You want to quit smoking? Try to quit smoking. You're never going to succeed at it. Nobody will. I mean, it's very rare. You just say, I want to quit smoking, and you're going to fight through it and fight through the shakes and sit there staring at the wall with your addiction, fighting back. Here's the way you quit smoking. You start working out. You do another thing that you can get addicted to, and then you love working out, and then you love the way you look in the mirror. You love the way you and your partner bump uglies because you look sexier and you feel sexier. Then you're addicted to working out. You're no longer addicted to smoking, because what you have to do is push your addiction to something else that's healthier. If you're an addictive personality, you're never going to get rid of being an addictive person. So shift your addictions around. I tell people the reason most of you fail in trading is you're addicted to the idea of making quick, easy money, or just shortcuts, or all kind of bad things that are taught in trading. And the way that you break your bad addictions, like over trading too much, gambling, which is most people, is you wake up and do a repetitive action every day. And the repetitive action every day, you get 2 instructions in our boot camp. Number 1 is you either A, wake up and make your bed every morning if you never did it before, and you just do something healthy every day to remind yourself to focus on a new task that's the same thing every day, no matter what, and like the fucking stream. It's a simple button click. If you can't come in here and click a button every single morning, that's just a one-click task. How are you going to remember the 20, 30 trading rules you set out for yourself while you're under pressure, underwater, and losing money? You're not. You're going to lose all of your trading money to pro traders like me as I run you through the mill and beat you into the ground as a trader. And I'll put all your money into my pocket. So if you can't click the like button, there's no way you're going to be able to click these other buttons that require you to manage your money under pressure. There's a whole reason for why we do. So it's more like people get, oh yeah, that is right. That's why he tells us to do these things. Because the repetitive action of remembering what you're supposed to do helps you remember what you're supposed to do. Yeah, Ralph is right. The best way to quit smoking is to never start. The idea is that we want people to make sure you wake up and do the right thing. And if I got to say, all right, guys, I'm not going to stream, everyone get in line, it's because that's what everyone needs to hear. And if one person slows down the rest of the team, then the rest of the team will start coaching the team itself. It's all about squad-based, you know. It's like if one person slows down, everyone drop and give me 20. I mean, they do it in the military. And guess what works? That works, right? The monthly maps are really, really not good looking. So it's all for the style and way of coaching. Actually, wait, hold on. Let's take a look at this. It's not really that bad. So remember, and I want you to treat me like this, Mr. Pat, is that we are more like I would say like we treat education like in a militaristic sort of sense. It's more about shaping you to think quick, act quick, and remember all the repetitive things you have to do every day. And so we're very strict, right? And that's the difference. We're just strict here, and everybody loves. That's why we're growing huge. We're about to pass our 5,000th member at Rocket Scooter. I can't be more excited about that. We've only been open just over a year. Okay, look, 5,000 client account. Okay, here. The bull map is getting better. Let's start over. Let me walk you through it. Alexander, they're not as good as they used to be, but but let me teach you something that maybe is harder to, maybe I didn't convey this very well. The bull side's coming back better than yesterday. This is better than yesterday. Is everybody's and broke? That's last month's BBB. That's not this one. This one's like 14 something. Let me answer your question real quick, bud. Hold on. That's the July BBB. Looking like that 45, 55 targets on point for today. I do like what I'm seeing here. Everybody remembers your yellow line, red line tricks. Okay. And by the way, we just launched futures to lifetime, and on Monday, futures gonna be available for everyone else. I'm excited. It's fun. Been playing with it. Things are looking good. I do like this red line target we're gonna go to. So let me show you something right now. You are correct. There's no more bull zone to be in at this price. but the bull side is returning. You're still deep in the money on these lower calls. People are stepping in where they weren't there before. It's getting a slightly more. Let's see if I can find the one from yesterday. I can't wait till we animate this, y'all. That'd be so dope. Ralph, no, it wasn't you. Who sent me? Somebody sent me a video that they made animating this. Let me see if I can find it. Where they showed animation of the monthly map, how it changes day over day. That was you, Ralph, right? Dude, can you send it to me again? Like, I want to look at it. That's the inspiration we're gonna have for the chart animation. Like, let me. I can't always forget where you're. That was you, right, bro? Okay, hold on. Y'all gotta remember too. Sometimes I get cranky because I'm an old man. I wake up on the wrong side of the bed. I'm still hungover from the night before. You know how life goes. I work out a lot, so I'm very exhausted all the time. And sometimes when the platform needs like we're facing a bug or something, I just get really busy in the mornings. So I don't respond to all those messages quickly these days. I apologize. Getting a lot better though. We're staffing up at Rocket Scooter, which is great, so people can be taking my workload off my plate. Where is it? Okay. Anyways, the bull side is getting deeper and the bear side is walking away, which is good. We can see that bear side and the market's starting to shake back around. Bulls are starting to step back in. One thing we want to be able to do is have like a vertical line that I can click and drag. And whenever I move the line to the left and move the line to the right, you can see the bars move up and down. Now, the old monthly, I'll grab it from Twitter. Okay. This is how this works. And let me show you. I did take my opening scalp, that long scalp. It's looking great. One of my students here took the long off a DD band, off a hedge pressure, and still in the long, hanging in there. I just took the scalp and got out, but this is great. Pretty good, nice little bump day. Let me go to my old tweet. So let me show you what it used to look like. Let's see if this is good. Okay, so this is like my prediction back in the day. Let's see if I can't. Can I make this bigger? Let me just go to actual tweet itself. Hold on. Okay. Oh, this one. Okay, good. This one right here. Let's make it bigger. Okay, cool. Do y'all see how this is? You see how it was very clean and defined? There's just bull zone, straight bull zone, straight bear zone. And now when markets got a little muddy, let's compare this to the monthly map now. Do you see how the difference is? Bears are starting to pop in. Bulls are starting to thin out. But you still have the bottom side of the bull zone still starting to get stronger. Yesterday, it was a little spotty. Yesterday, we only showed about 3 or 4 days of possible bullishness before we had a bear wave. Now, look, 1, 2, 3, 4, 5. So it looks like we're bullish in expiration. This is a great sign. Great sign. Travis is correct. I think so. I think they're starting to build their positions back up. So this is forecasting. So those of you that don't know what monthly map is, this is one of the best tools ever invented for traders. Monthly map is what I used 2 Decembers ago to call a market top. I used last October to call a market bottom. And as the market rallied, I was bullish every single day, DD ratio shows that the market is still bullish despite the selling. 94% of the market cap is pushing in bull side. Monthly map is forecasting how long the bull rally stays bullish. Back in June, it was saying it was lasting until October when everybody was like trying to short this since April. Us at Rocket Scooter, every person here has nailed this. We have been the strongest bulls because of this monthly map. It tells me when the market pivots based on people's active positions in the market. These are options positions. That's the thing, Drew. That's one of the new frontiers. We're not really sure. Does the top of the bull zone and the bottom of the bear zone hold any significance? If it's out of the money, we assume that it doesn't have significance. 55. 45, 55, red line if we get it. 1.5 points higher. I would say, yeah, we're actually running to triple B today. I'm liking this on the VIX. Very clean. So to answer your question, I'm not really sure because we need to really do some studies on this. But if you're out, okay, let me example on this one, Drew. It's a great question because we really need to do some studies on this. This is such a new frontier for us. The only thing that we use right now is the bottom of the bull zone, the top of the bear zone to find where liquidity is and bull and bear positions are. The slope of the zones show what's going to happen. Volatility is going to get crushed if the bull side slopes down and the bear side slopes down. Now, this was as far as June goes. The question is, if at the money is here, do out of the monies mean anything? And the answer is we perceive it as no, as of this point. But the question is that thicker bull zones, if you like them thick, oh yeah, do lead for a possible stronger move because you have more zones or more calls in the money that can create more upside. Now, while there are calls in the money down here creating upside, the difference I would think is that, to explore your question, is that if these were solid bull candles, like all the way through, like this, then clearly that on the surface would be stronger than that. Will we all agree? Like if you just have like a couple of speckles like this, okay, I mean, it's definitely bull positions are stepping back in. But if they were like this, out of the money, like thicker down in here, then that would be stronger than without. Now the question is how high these go. Does that create support or resistance? Does that create any problems at all? Well, right now they're out of the money in near term. They really have no risk on them, right? So out of the money, they're likely to expire worthless. So the question that we said was that how high the bars go and how low the bars go on the bear side. We initially ignore that as being not useful information. But what we would know is that if this is the active traded price right here, that if the bull zone was extended up to at least there, you've got more calls that are in the money being exercised on than just the ones that are present. So Drew, would that make sense to say that the height of the bars up to being at the money definitely should matter, being perceptibly more bullish? I would agree. Now, like as you see right here, this is nice and clean. Like all this is pretty much at the money and in the money. But if the bull, if they go like really high like that, does that mean anything? I don't think it would mean anything because they're out of the money. The further away it would mean something. The closer out of the money it would mean probably nothing because they're going to expire worthless. So the question is can we create like a degree of bullishness or something that would like, it would be a very simple equation to have like a new indicator for everybody to say area under the curve. Like an example is how bullish is this to this point? If the bars went all the way to here, then you'd have like an area under the curve relative to this rectangle. And then you would say, okay, it's like 60%. That's a good number. But if it was just like these guys right here, maybe it was like, 30%. We can maybe do that to create like an indicator to say the strength of in the money zones. It could be leaps or could be options sold as part of a like a calendar spread or a credit spread, just to hedge positions. Like initially, if you're shorting the market right here, one of the best ways to short the market betting for a collapse is you're going to buy out of the money calls for very cheap, because if the market becomes volatile or the volatility collapses, the market just climbs up, then your calls will buffer your loss on your trade. So a lot of times they can be stop losses, just like these puts could be just, maybe puts people bought. It triggered our algorithm to think it's market maker puts, but essentially this could be just people long the market puts for insurance as well. But ideally, I've always dreamt up like an indicator to try to figure out the strength of this. If you were to say like, what's the strength between here and here of the bull side, then what it would do would be it would draw a rectangle and it would calculate two areas. Number one would be the area of bull versus bear side. So like this. I'm actually gonna take a picture of this. I actually might make this. And it might say, okay, this right here is 60% bullish, 40% bearish. And then, okay, so you can make a judgment call. Slightly, it's more bullish than bearish, clearly. Both are sloping down, so it's bullish. The other one would be like an indicator to go with the monthly map. The other one would show this. Like this is the next one I would show. Oops. The other one would be the ratio of bullish, like in the money or out of the money. So it would be like essentially if this top half was 60 and this bottom half was 40, we'd further subdivide the 60 as two different parts. How much of that is bull in the money, out of the money? And it might say like, okay, of the 60, 20 of that's in the money, 40 of that's out of the money. So then we can have like an indicator that slides the scale and say, yeah, it's bullish, but it's not as bullish as it can be. If all of these are in the money, then that would be 60 and 0. So it'd be like straight bull zone, all in the money. That would be your scale at 100% on your indicator. If you had like an oscillating indicator, that would be pegged out at 100 for the bull strength of the bull zone. We call it like a strength indicator. If that indicator was like down at 20, you'd say, okay, it's still bullish, but it's only 20% bullish. And then you'd have a separate indicator on the chart, which would be the bull bear strength, which would oscillate around 0. This would go to negative 100. So essentially, in this scenario, you'd have a bull strength of 60 on the oscillator. And then you'd have, or sorry, a bull bear split, and then you have a strength that would be a certain amount. So a way for you to have monthly maps give you like an oscillator down here to show the strength of that trend. Something like that. Just kind of brainstorming out loud, thinking about how to do that. I think 45.55 to close out that red line would be probably the step out. Exclude 0 DTE in that, or it might skew it. I think you're probably onto something there. Like today's option. Well, it would be interesting to see, because I mean, it is important, right? It could skew it if we, like Madru's saying, is do we exclude these bars right here in the analysis? Great question. So what is monthly maps, you guys? What is, anybody here not know what monthly maps are? This is the most breakthrough of all indicators, period, that I've, number one, that I've made, but that I've ever seen. I'll give you a little tutorial. Yeah, so like it has to do with where the current price is. So I'm thinking I create an oscillator on this. Okay, so here's a quick tutorial on monthly maps. Let me show you let me show you one. Let's do a random stock. Okay. All right, you guys ready? Everybody, I'm gonna grab me a quick bite to eat. If you've never seen monthly maps, you don't know what they are, you're having a hard time, but type in chat and let me know. So that way I know where everybody is, and I'll go there and try to create a little quickie lesson for 10 minutes. I'm gonna blow y'all's minds. Y'all are gonna love this. Thanks for smashing the like button. See, I love that you guys are being very helpful to the algo. Okay. Righty. Right. I got me a breakfast of champions. Slice of cheese and a piece of bread. It's a raw grilled cheese. It really is, right? I just killed it in the wild with my bare hands. I didn't even cook it. I just need to grab something. All right, here's some monthly maps, as you guys. Let's talk about it like me or like a random stock. Let's just put in a random ticker. Matt Rich. There we go, baby. Yeah, that's right. Only craft singles in this baller's household. Seriously, when it comes to the cheese slice singles, you can't ever buy store-bought. You always have to buy craft. They're the only ones that are good. Nope. Pro Plus options, Pro Plus futures will launch Sunday night. Be ready for you Monday morning. Okay, Tesla? Okay. Okay, perfect. You guys ready for this? All right. So what we know about a liquidity map, let me get right here, is that we know where bull zone is and bear zone is. Bull zone is a net imbalance in the money. Calls. Put zone is based on puts. Bear zone based on puts. So we know where the bulls are positioned, the bears are positioned, and where markets are liquid in the middle. Another takeaway is the distance between a bull and bear zone implies the volatility. If the distance is really small, in general, it's less volatile than if the distance is really big. Where bulls and bears are farther apart, they disagree more, and therefore the market's more volatile. It's thinner. When bulls and bears are right on top of each other, like this, then the market is not volatile. So a very thin bull and bear zone has a lot to do with the lack of volatility. You can see right here in general. So that principle, we all got it. Everyone type yes in chat if you get it so far. VIX right here is trading lower. The market is becoming less volatile day over day. As we see, those zones are tightening up. They're right on, they're 50 cents apart. Okay. Now, when you take a monthly map, what you do is you stretch. When you look at a liquidity map, you compress all of the risk into a adjusted for now basis, to where all options at all points in time are adjusted for now to create a single risk profile for now that includes all Greeks and all options at all times. But if you take that compressed slinky and you stretch it out, and each little rung on the slinky coil is an expiration, Tesla, if I were to smash all these together and adjust the equation to put them all in the same time, which would be today, we'd create a liquidity map for Tesla, which would look like this. Tesla shows clearly a bull zone at 240 and a bear zone at 220. That's pretty far away, and that's very volatile, okay? So in a general liquidity map, Tesla should be experiencing volatility, and as you see, it really is. These candles are getting wide and big and up and down. You can just see Tesla alone is being volatile. Well, it's like by comparison, while SPY has been trading down, one can see that SPY is nowhere near being as close to volatility as Tesla. As a matter of fact, Tesla's been selling off since the 19th of July. SPY's only been selling off for like 6 days. So does one see? We can see the difference, right? The space between bull and bear zone on Tesla much bigger. The volatility on Tesla since earnings much bigger. We get that? SPY, while it is selling off, not nearly as volatile as that. So the principle is pretty easy to see, right? Okay. So Tesla, while being in a bull zone today, overall it's in a bull zone. It still has volatility that's present relative to something that's, you know, comparably trading down. All right, so now what a monthly map is going to do is going to stretch that bull zone and bear zone and respectively just show the actual expirations on those days, adjusted for those days. So like this option is looking at the risk at that point in time. This option is looking at the risk at that point in time, etc. So what you're looking for is where the price is trading now, where you are relative to the landscape as time goes by. So now what this does is it allows you to see risk as a point in time. Like if I buy puts, where should I buy my puts? When? What expiration? If I buy calls, how long am I bullish for? If price stays exactly the same right now, as an example, in Tesla, if I'm moving my mouse to the right, I'm passing through a bull zone right here for this day. At the bottom of my axis is 11 of August. So at 251, Tesla is still bullish. They're still in the money puts, feeling it higher. I mean, the money calls feeling it higher. If I move another week, there's even more in the money puts, in the money calls, bumping it higher. So as my mouse moves, I'm passing through a bull zone. Just imagine like that this is a bull wave and a bear wave. Okay, ready? I'm moving. Okay, I'm bullish. I'm bullish. So the upper ones are the bulls and the bottom ones are the bears. I'm bullish, and then wait, I'm no longer bullish here. The bull zone has left me. I'm not in a bull zone. And also another thing to take away is as you move your mouse to the right, you're never in a bear zone for these 4 weeks. Do we see that so far? So what you can tell yourself, this analysis, is that Tesla at this price, around this price, as long as price stays the same, it's still bullish for 2 weeks. Because as time goes by, you're going to have more in the money calls longing Tesla just for assignment. People that sold these calls are going to long Tesla as those calls, as you come closer to expiration, the probability of these calls go in the money goes up. And therefore, at some point between here and there, the person that sold these 200 whatever calls will have to long 100 shares per call. It takes a lot of calls for them to appear in the algorithm here. Thresholds identified pure liquidity with both side owning this price, right? So as you approach here, there's just going to be somebody coming through and longing as these options now are in the money and expiring that day. So the way that you look at it is that if you draw a line, which the algorithm tries to do for you, at the bottom of the bull zone, you can see the degree of how many options are in the money as time passes. That would trigger an illiquid move, which is what this is measuring. As the triangle gets bigger as time goes by, you can see that there are more options that will be producing long pressure on the market. Do we all understand that? So Tesla, if Tesla remains bullish over the course of this week, Tesla becomes more bullish as time goes by, just for this period. Do we all understand? Type yes if you get it. No if you're confused still. That's the principle of it. Okay. Now, removing price altogether, if you're just to look at the progression of this, if there are more, if the bull zone goes deeper at the bottom, then it's more bullish. So you can just draw a line like this as the bottom of the bull zone slopes down, bull zone slopes down, then the actual response of the market, let me draw it with a green arrow so you understand this, is more bullish. Then it's more bullish, as in more people are going to be longing this between here and here. More, it's the bulls are becoming more bullish. Bull longing more. So if you have like an invisible, or if you had a list that shows the net long position of everybody that's long Tesla, you can make a pretty solid guess that between now and this day, that number would grow. More people will be long Tesla, right? Okay. So on the other side of this, if this line slopes up, then there are no more bulls. So there are fewer bulls, right? Bull selling. If the monthly map points the other direction. So you just think of the opposite. The monthly map slopes down on the bull side, longs are longing more. If the monthly map slopes up, which starts here, bulls are exiting positions or taking profit. So essentially bulls are longing for a couple more weeks. And then they're selling. They're running out of the way. There's nobody that wants to get back in the Tesla. They're likely going to be selling for profit. Yeah. So the bear zone, think of it the same way. If the bear zone slopes down, then there are fewer bears over time. So bear zone points down. Then shorts that are actively engaged in a short are now getting out of the way to cover. Just again, think the opposite. If the bear zone is sloping down, then the bulls are longing, or bulls are buying. The bears are buying. So bear is somebody that's short the market. Bears buying is bears covering or exiting trades. So bears are getting out of the way if the bear zone slopes down. If the bull zone slopes down, bulls are longing more. So over the next 2 weeks, more bulls are getting more long. Bears are getting less short. And actually, this should be there. The algorithm's lines aren't necessarily. We need to polish it up a little bit. Your brain would need to use the top of the bear zone right here. Like that. Same principle though. Oops. So bears are covering. Longs are going more long, which means both bears and bulls are buying. Tesla's expected to move up because of that principle over the next week. How cool is that? All right. So if the bear zone is pointing up, it means bears are becoming more bearish. It just basically means people that are short are shorting more. So bear shorting more. They're opposite. So if the map goes deeper, if just think, if this line slopes down, then bears are doing, bears are buying. Just think down means up. So on the bear side, don't try to wrap your head around. It's hard to, unless it snaps into place, you'll finally get it. But just think down means up. So if the bull side slopes down, then bull positions go up. If the bear side slopes down, then think up as well. Bears are buying the market to push it up. So if things slope down, just think market goes up. Easy as that. Don't try to like break it down like this. If they're both sloping down, the markets go up. So if the bull side is sloping down, bear side sloping down, on the monthly map, this is the map, then the market goes up and they both slope down. That's the takeaway. And this is the breakdown of the reasons why, because bulls are longing more, bears are exiting shorts, which means they're buying to cover. Okay. If the map both slopes up, then markets are going to come down. As in the case of Tesla, from about August expiration, bulls are taking profit. Bears are not necessarily exiting. It looks like they're probably getting a little more bearish. They're both pointing up. So now I'm going to forecast what Tesla's going to do. Make sure you take a screenshot real quick. I'm about to delete. So remember this timestamp. Come back in the video. Okay, ready? Deleting in 5, 4, 3, 2, 1. So now with the monthly map, here's what Tesla I think is going to do. Every morning this structure will change. We'll come back and read it. Tesla's likely to move higher. More likely to fill that gap than it is to crash from here and then continue to sell. So most of the market does look like this. Most of the market does look like it's willing to retrace and revert the mean before another wave down. The bull and bear maps are overlapping each other. A lot of times that means transition. Remember, this is the first year we've had monthly maps for the most part. And so now we're getting to see what a transition phase looks like. When the S&P, let's analyze the S&P, what it looked like in June. Remember in June when everyone was bearish and we were bullish? I mean, so bullish it wasn't even funny. S&P was right here and we said it's going to keep going. Because remember, bull side slopes down, market bulls are longing harder. Bear side slopes down, bears are covering shorts. Two ups means the market's strong and bullish. And we were strong and bullish until a catalyst came through. The credit rating downgrade shifted the market. And this nice, clean monthly map, look how clean that was. Easy, clean split. Turned into its first catalytic jolty ass nightmare that we're reading for the first time. So now all the talking heads here are all kind of convening and like, okay, what does this mean? You see how that basically it looks like a fucking asteroid hit the planet. It's just chaos. Now let's try to draw a general trend here, but you see this is not clean like the other one was. Side by side comparison, you can see how while generally speaking, some of those positions are still there for that shape, but you can see the bear side got some spikes in the middle ever since the moment that catalyst happened. We can now see visibility that while we saw that slope and decline through October, I initially said the market's likely to rally to October. The minute that catalyst happens, the very next day, we can come in here and target when the market's done selling or rallying. With pinpoint timing accuracy. I've been the only person in Wall Street that's timed both the top and both the bottom within days of it happening. And people, again, I'm using only monthly maps. As a matter of fact, I made a tweet highlighting using monthly maps to pinpoint this is the end. So as you see, we're seeing a full disintegration instead of a gentle curving. It happened very rapidly. Now let's go ahead and draw what we know so far, right? Let's just kind of mark this up. And I'll show you those calls I made. Look, literally within days of the reversal, called the reversal. Bull side is strengthening. That's great. At the bottom, I'll use the red line for bear side. Bear side weakening. That's great. Right? So that we can see between now and... Oops. That's weird. Between here and about right here, which is the week after August expiration, market's more likely to go up than down as of this morning. Yesterday, it didn't have this shape. Yesterday had like 1 or 2 days left, and we said, man, if the market doesn't move in 2 days, then I'm going to change my bull sentiment. Wake up this morning, monthly map is nice and clean. So we're likely to have a rally into monthly expiration rather than a sell-off. There you go. Monthly maps is literally changing the fucking game for traders. And we wake up today to a rally. How good is that? Which way is the market going today, everybody? Monthly map didn't look like that yesterday. You get to see the shift in people's positions. It's that clean, and it's been fire. I mean fire. Do I have a monthly map from August the 2nd? Yeah. I have one from August the 2nd. That's what it looked like 1 week ago. You see how 1 week ago bear positions were creeping back in? I'm going to circle the difference. 1 week ago, it was bearish at the money. Right now, those bears are gone. This to there over the course of the week has disintegrated the bear side. Those at the money puts are no longer there until after expiration. You'll see the difference. This had me scared, and I was sitting here saying, well, we got maybe 2 or 3 days of rally, and then it's going to get nasty. And we wake up every day waiting to see which side starts taking over, and the bull side is creeping back in, the bear side is out. So you see how ever since that news and that catalyst came out, the monthly map stopped being clean. It's starting to move around. Every morning we rerun the calculation to show that shape. What happens if the market moves up and then tomorrow this goes away and we're replaced by more bull zone? Then it extends the bull rally to September. This is designed to help you time pivots in the greater market based on people's active positions. So let me give you a history of the S&P, right? All right. So, and again, and I tweet these things for evidence to show that we really do it. That's where my Twitter is here. Find that little bookmark post. So now we probably got 2 more weeks of rallying. It's very possible. And again, every morning I wake up and I look at this again. To trying to find my little tweet here. Hold on. The time when the market's going to stop moving. Bears and bulls, classic technical analysis with bears and bulls have been losing to monthly maps. The analysis that we have in that's just been fire. Okay. We didn't have monthly maps released until this year. I had been building them from scratch every morning to analyze the market tediously. After COVID crashed, people were calling Chicken Little right here. The sky is falling. We're going to collapse again. And I said, no, it's still rallying. I made a famous tweet back then that said there is no pullback or recession based on COVID. This is not related to today's effects. This tweet is in 2021 based on those effects. People said COVID and shutdowns, global problems, yada, yada. The sign said we're going to keep rallying. There's no pullback or recession. And we never pulled back once for a year. We get here, this first red candle. Look at all the red candles and months down. And all of a sudden, this is the first, you'll go read. This is the first bear tweet I made. Literally the first red candle of the sell-off. Here you guys, the first bear to the party. Don't listen to the people that when markets are rallying, they're bearish 6 months early. I was the first bear on Wall Street. First time in as long as I can remember that I'm seeing a short-term correction to the market. And I use monthly maps to show that disintegration. We lost the bull side immediately. Volatility is going to take over this month. And likely the quarter and the sidelines is a good idea starting now. Look at this. Then I call the top. Okay. Point taken. Monthly maps. Right here, I called the bottom for 2 months using monthly maps, even time, and it lasted exactly 2 months. Literally, from like the 18th to the 18th or something like that, whatever day this was. Again, monthly maps showed a 2-month strengthening pattern. I timed it for 2 months, long there and shorted there. Right here. I literally said, here's a 2-month bear market rally potential. Bottom is in for now. Okay, and here, this is the bottom for 2022, which was 2 days after the bottom. It's a green candle, a red candle, and I said, that's it on this day. The bottom is in for the year and rallying through mid-January, genuine buying. It doesn't even get nasty again until the summer of next year. So everyone that's bearish, I was bullish using only monthly maps. That's it. Right here, recession mechanic is over because we saw all the economic data looking good. And then the monthly map stabilized right here before we had the event that shifted it around that said the bull side lasted through October when back in like last year, I said it lasts until the summer. So as the summer approached, we reanalyzed the market and said, where are we now? It said it's still going. And now as we get that catalyst come through, The market now doesn't look so pretty. It doesn't look terrible yet, but it looks good for now. Analyzing what we have on the surface, we can clearly see the bull side is stronger, at least until here. That's the week after expiration of the monthlies. The bear side, which is down here, getting weaker along the same flow. So this is indicating that between now and August the 18th, or actually whatever, the 20-something, 25, the market is more likely to go up and double top this before it starts to find its next problem. So if I were to take a bet right now and people are coming in here longing puts or longing calls, whatever the case may be, this is showing me, at least as of today's landscape, where I am positioned against everyone else. I'm more likely to want to buy dips between now and here than I am to short pops going from here. Number two is, you remember the first lesson I gave you that the space between bull and bear zone indicates volatility? This space is very, at least from here, it's almost non-existent, 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 non-existent. For 4 days, there is no volatility. 4 days, I'm expecting volatility to crush. So hello, option sellers. Hello, people that sell puts while that volatility collapses over the next 4 days. And then as we see right here, get a little burp of volatility leading into monthly expiration. This is a low IV environment. So monthly maps can tell you all of this. Low IV leading up until monthly expiration, and then higher IV. So a little more volatility. So chances are we rally through monthly expiration. Maybe we sell a little bit. And then here it gets a little muddled. This is very not clean, right? The market is very disintegrated here. As a matter of fact, right here, the market is in no zone. How do we analyze this, right? And the way that our algorithm analyzes this type of behavior, if they're not showing for you, make sure you have the liquidity map indicator actually added to your charts. And reset your, load your defaults up if you're having problems. And try a different browser also if you're also having problems. A couple things to try. So one of the things is that the way our algorithm looks at this is if you have a bear zone and a bull zone, what happens if you're trading above the bull zone? Our algorithm still calls it bullish. So while there is no zone overlapping here, they're still in the money calls, which therefore it's more bullish than bearish. We call it bullish. So what happens, again, what happens if you're trading above a bull zone? It's still considered bullish. Like if SPY today were to move through here, the liquidity map would still say B. So what it does is it moves lower to find out what zone is nearby. Here would not show bullish or bearish. It would show mean reversion because it's above a bear zone and not in a bull zone. And that's the logic for mean reversion. So over the course of time, if we were to draw like a letter for liquidity map, what it would say from here to here would see B, MR, B, 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 MR, to here. So in nowhere does it become bearish yet at this price. If price were here, then it would be bearish here, bearish there, bearish there. So every morning we're going to look at where price is relative where, but at this current price, it never intersects a bear. Never intersects a bear zone once. Now again, if somehow the market continues to sell for whatever reason or a new catalyst, then clearly we start intercepting some bear territory, and we're likely to start to see some shift in positions after those drops. So every day you got to wake up and reread this. So I wake up today and say, okay, we're still safe for a little bit of time. Volatility is going to be in decay, check. All right. And like we can just, I mean, it's like you wake up and there's your volatility. Look at that. You wake up, volatility is in decay. I mean, it's reflecting exactly what monthly maps is showing you just using options. So volatility and decay, check. All right, good deal. Bull zone stronger, bear zone stronger. The market's more likely to buy dips rather than sell highs. Okay, let's go back to the daily, and you can see that, like, you know, today people are still trying to sell, but they're getting squeezed. Now, again, we are irrational as we talk about this. Anytime you're outside of these DD bands, market's irrational and random. So, you know, that's why I say you always should trim position and take profit. And so as markets are rallying, irrational, you should always, you know, with a grain of salt. We don't trade too far beyond DD bands. Like I said, I took my profit out for my day trade. So it's pretty cool. So you could put any stock in here and analyze it the same way, like NVIDIA. Let's see what we got in NVIDIA today. You can check out the Pro platform for $35 a month. Very, very, very simple. You sign up on the website. The link is in the description below. Come play with this. For 3 months for $35 a month. That's $200 a month normally. So you can get in here and for 3 months just play around with it and get to use it. We have a special right now where we're unlocking the full version because we're celebrating our futures launch for less than $100 a month. So it's half price for anybody that locks in Pro Plus for this futures launch event. Half price. And I'm excited to like release all this to everybody. So NVIDIA at this price, not bullish, and then becomes, you know, it's definitely in bull zones. Bull zone stronger, bull zone slightly weaker. NVIDIA, bear zone still leaking away. Once this volatility checks out, it seems to be more likely that NVIDIA moves up rather than down. If I wake up tomorrow, it looks different, then I'm different. Here's what's going to make you better than everyone else on Twitter or everyone else on Instagram or whatever. Everyone's bearish and they're 5 months off on their timing. There's no impress. That doesn't impress me. Somebody, it's like market's bearish, selling since April, and then finally it sells off for a week. They're like, see, I told you so. That's not a person that's making any money trading. They're not doing anything right other than reciting a textbook too. Yeah, there's bear economics at play. Oh, congratulations. You figured out economics 101. High interest rates, yield curve flips. So you want to meddle. We all understand that. So saying the market doesn't price in what's happening now. Market prices in what it thinks is going to happen later. Market is future looking. The economics look bad now. Our market's going up. You shouldn't disagree with the market. The market's telling you the economics is likely to get better. And it has been. Market's been going up as the economic data has been improving. Now we have some bad economic data and catalysts coming through. The question is, when those longer term economic effects start to realize and when people start betting that that's going to happen. As we see right now, in June, I said we're rallying till August, and then, until October. And now as August came through, I said, oh, we're going to be lucky if we rally through the beginning of September now. You see how my timing is like, it's like I'm landing a plane on an aircraft carrier in the middle of a storm and there's waves everywhere. I'm like literally or trying to dock a space station. That's a moving target and I'm moving it very accurately. Within the first day of that selling, what was October as a rally turned into September as a rally. Now it's turning into the end of August. You see how my mind is able to see how far out it's gonna last. I'm not just stupidly bullish. Yeah, on a heartbeat, I stopped shouting the bull side on Twitter. Within a moment's notice, I saw the difference. That's what's great on monthly maps. So while we do have a bull side likely still rebuilding itself to retrace, I don't think we're gonna get breakout highs unless the maps show that going forward. Ooh. Let's see what we have here. Hedge pressure tap. Should I throw a contract at it? Just for the hell of it. Back in D bands. What do we think, y'all? That volatility, that VIX bounced pretty heavily off of that triple B today. I think I was gonna call it a day. This is an old triple B pivot. That's not. It's arbitrary. I wouldn't think too much about it. But I think the market's trying to sell highs, and I think that if the monthly maps tell me anything, is it able to buy? Let me just put some micros on it. I just grabbed 3 micros, nothing crazy. Where are the candles? Oh, hold on. I'm going to use the analysis I just made to determine if I think that the market's going to have a hard time having people sell dips. I mean, sell highs. And I think that it's showing that growing bull case, then I'd like to see that growing bull case manifest here. Now, again, 3 micros is nothing. Look at this, 20 bucks. So monthly map is all about timing the market. That's different. And it's like, who cares what people's opinions are? This is where Wall Street's positioned. This is where market makers are positioned. This is where the risk is. This is where people are making their bets. That's all that matters to me. People make stupid bets, and when a long something that doesn't make any sense, it goes up until it stops going up. That's what happened to crypto and NFTs. That stuff just goes up and up and up and up because people are willing to buy it. They have no utility, no economics, no purpose in life. Those things are completely stupid, and everybody that invested in them lost most all of their money. But if you rode the wave up, you probably made a lot. And if you're the first in and first out, you made all the money. And the goal with monthly map is to teach you to be the first in and first out. Imagine right now, what is a bear thinking? Bears are out there. Markets falling to 4,200, 3,800 like in the next month or two. September, October is going to be horrible. No, it's not. It's not going to be great, but it's not collapse. There is no indication on monthly maps that we are flipping into bear territory. DD ratio is still 94%. We're experiencing some short-term volatility and some short-term hiccup. Now, my brain isn't locked in the idea that we're rallying to 5,000 anymore without a pullback, but we're not dropping to 4,200 and 4,000 and 3,800 this year. Monthly maps looks far out. There is no bear positioning building up. There's just bulls taking profit. Bears are still not stepping into short this yet, as much as people want to see that happening. So now I can time the market very well using monthly map. That's my whole point with we designed it that way. Now I know that, okay, if I get a good rally, it's only lasting for a couple weeks and I'm done. Right. Putting in auto liquidity thresholds. As far as like building advanced features into the account manager and such, we, as of now, our launch state is only going to have what you see right here. We have a pathway we're going to take, and what we might actually end up doing is building all of this from scratch at some point. And building that out, but building from scratch instead of using TradingView. If they have the ability to have something, we'll probably just quickly turn it on. But TradingView being our stopgap in our development gave us the ability to have these things pre-made. We want to make all custom stuff. So eventually we'll have a project where we build out an account manager and a reporting and all that stuff, and we'll build it all custom. So the goal is do, if it's something that like everybody needs now, we can halt the projects and just like push a couple of things. What I want to do once everybody gets into futures is sit everybody down and say like, what TradingView features do you like that we must have? And then when we spend a week just turning it all on. But no, by the same time next year, we will have a custom DOM and a custom chart and custom account manager reporting. We're gonna build out everything on our own, so that we can have full customization of what we give to you guys. So down the road, we might build our own account manager. Okay. So let's see what we got. Resilience is still strong. We're still outside of the box. We open below hedge pressure. The market might want to go below hedge pressure to support. That's why I'm not going too heavy into this. Right? Markets tend to close on the side of hedge pressure they open on more often than they don't. But longing hedge pressure is always a decent sign. With the resilience being strong, I think the trend right now is their market's trapping some shorts. Now the market is trading like it's very volatile. However, the VIX is still in decay. We'll just see how it responds. European markets close in 30 minutes, so we'll see if that turns into anything. Man, I'm just loving how quick and fluid this is. Let me see if I can turn off. I need to make this instant order placement triggered. So if I just buy, right? Oh, that's clean. Let me turn off notifications because I don't want to see notification either. Rejection notifications only. Hold on. Executions price line. Oh, that's kind of cool. You can show profit and loss on the chart. Okay, and this will get rid of the execution. Let me test something. Oh, that's good. Yeah, I don't want to pop up something on my chart. Okay, good. I can turn that off. Nice. Excellent discussion, monthly maps. Oh, cool. So I'm glad you liked the feature. The feature was designed as my brainchild to help me time the markets better. Not just being bearish and then 2 months later, market turns around and you're like, see, I was right. Imagine being bearish the first day of or the second day of. Imagine being bullish from October of last year until August of this year. And then when monthly expiration rolls around, I can see when I want to be bearish. I'm not screaming blindly like the sky's falling. I'm more studiously approaching it to pinpoint with accuracy. The first person in the trade makes all the money. I'm going to prove that today. Market looks strong for 3 or 4 days. I'm going to buy this dip right now. If I'm wrong and we sell off, then I just stop out below hedge pressure. But the positions now are leaning to the side that it's more bearish than bullish. I know it doesn't seem like a lot, but monthly maps are leading me into a trade right here. I believe it's more bullish than bearish. I'm going to take the idea that what has been bearish is going to break into bull side. Let's analyze everything we know so far on liquidity map. Bull long up is to support here to next resistance. Okay, check. Next resistance was actually DD band, which was there. Okay. The market's more likely to close down here. We all know the stats on the S&P. It's about 11%, about 89% chance or probability on the back test that S&P stays on the side it opened on, and 11% probability that it breaks and keeps going. Hedge pressure breaks are the rare case. The DD ratio, which is in the, actually, let me just, on the top of the platform was 0.94. DD ratio means bull zone is support for the day. Resilience greater than 0 means the top of this box is support. So support here, support there. Hedge pressure is breaking with a small probability. That's why I have a small trade. And we're irrational DD bands. Look, that trade's already taken off. So today, with resilience being strong, DD being strong, today might be that transitional day where we get a nice bull run to play up. And look at that. Just goofing around is a $200 decision, which is a couple micros. So ideally, being able to understand that while everybody's trying to short the high, I'm the bull looking for dips for the next 4 days. And that's how it works. Like I said, I'm probably going to call it a day. Get some meetings this morning. So let me just flatten that out just for fun. Like that's $200. Not a big deal, but you can see how my decision is different. I'm not seeing these red candles and I'm not scared of them. You know what I'm saying? Just ideally, hold on. All right, going closer to hedge pressure again. Now let's take a look at this. Everybody, question is, do I still want to throw like some smaller? Now again, DD band is here. That's the only hiccup I have. That look on my screen real quick, everyone. Upper limit is about right here. 24, 25. Okay. Typically, we don't trade outside of DD bands except for. So inside of DD bands, this is typically the resistance, right? And so on the S&P, hedge pressure is right here. I'm going to kind of draw out the blue line, like kind of relativistically where hedge pressure would be. Okay. So hedge pressure to DD band was a quick scalp that I did. I just got in and got out. When we got right into here, I just threw a couple contracts, and when it tapped, I closed out. Typically, you don't. Once you exit here, it's random and irrational. Where the market goes from here is completely random. Now, if I wanted to just be a maverick and bet that we break out and we long for the day, right now I would long, literally. So if I were to buy like 2 micros, just something very small to bet that the market just stabilizes and rallies for the day, I'm going to do a set it and forget it trade. And the set it and forget it trade is pretty easy. Is that there's a fixed stop and there's a fixed loss. My fixed stop is if I lose 10 points. Now we've been pegging at 4,500 for the last couple of days. If I lose 10 points on here, I'm out. If I leave it till the end of the day, then I take what I get. So ideally, a micro is, I'm going to lose, what? $25 if I'm wrong. That's it. Wait, no, how much? No, I'm saying my math is off. How many do I have? 2 micros, right? Oh, I'm sorry, not $25. 10 points to 4,500. So micro is $5 a point. It's about $100 if I'm wrong. Sorry, I see $25. And if I'm right, I just take what I get for the rest of the day. Clearly, I want to have risk and reward. If I'm betting irrational, I have that 45.55 was that upper target that I was looking for, that red line, which is way up here. So if I want to take an irrational bet that this is a day that the market reverses up, then I've got all my pieces there. So I either get an irrational break in a rally, or I just stop out if I don't get it. Easy as that. Yeah, and by the way, yeah, FCM can set those auto liquidate parameters for you. You just ask the broker. That's correct. Yeah. All right, guys, I'm gonna get out of here for today. It's pretty decent day. I mean, again, like I said, I like what I've been seeing. Market's still trying to find excuses to sell off. People are still trying to sell this. Hopefully the data shows more stability going forward. So I'm excited to see that hopefully things stay the same. And then we continue to move and rally for the rest of the August expiration month. So we'll see y'all later. Love y'all. Don't forget, we're having this massive launch special for futures. You can join the Pro Plus for less than $100 a month. You can lock that in and get started on Monday when we launch futures to everybody. Currently, it's in beta test to our lifetime members only. Lifetime members can trade futures now. We're excited to open these doors and get everybody involved. Next step is to automate DD bands and other futures-based indicators. Going forward, I'm excited to have most of our stuff automated, to be honest. So as this progresses, feel free to sign up. $35 a month just to try out the platform for 3 months and go through all our education and learn all the stuff we teach, which is pretty invaluable as far as price goes. You can get a lot out of that. For 3 months, hang out with us, learn everything, and of course, you want to take the plunge, less than $100 for a $200 a month package, and lock that in for life as our launch special founders fee or founders discount. We'd like for y'all to check it out and jump right in. We're growing so fast, and we're glad to have you all tune in. We love y'all. I'll see you tomorrow.